Hello and welcome to Unfair Advantage, the podcast from Tin Man Capital. We're a venture capital firm that invests in Series A technology companies that serve large traditional industries. My name is Murli, and I'm your host and a co founder of the firm. This is a show about how technology impacts your industry, your everyday life, and can put you ahead, all with a uniquely Southeast Asian point of view. We're recording in October 2025, and my guest today is an old friend of mine, Rajiv Menon of Cisco Investments. So, Rajiv, we will certainly give you a chance to introduce yourself and your firm later, but first, I have a burning question. Some people are already calling AI a bubble. What aspects of AI are overrated and what are underhyped?
Wow, I think, steal some quotes from people much smarter than I, folks like maybe Bill Gates and other well-known folks, and I'm doing so because I agree with that. Often with these big technology shifts, big trends, mega trends, folks tend to overestimate in the short term and underestimate in the long term. I don't know if I could comment on what specific aspects are overhyped or underhyped, but generally speaking, I am of the opinion, which perhaps doesn't distinguish me from many other people, is that life as we know today will completely change and transform work life, personal life, perhaps how we interact with family around the world, the kind of risks and cyber risks that we all deal with and know. I'll also highlight that many people will generally appreciate this. I don't know if many people recognize how real this is all about to become or indeed has already become. So that's what I would say about AI at the highest level.
That's great. And that's from the perspective, I think, of a user or someone who's basically consuming potentially in some form or fashion AI. What about from the perspective of someone who's an investor or building an AI company? What parts potentially of the AI stack, if you want to call it that, are either overrated or underrated, right? So by that, I mean foundation models, is it chips, is it data centers, is it application layer, is it something which is not AI itself, but an enabler or being affected by AI?
So your key focus being what is overrated or underrated?
Yeah.
I don't know. That is the $1 trillion question, isn't it? I don't know if I'm smart enough to comment on that. That is a matter of debate for, again, people much smarter than I. But I will say that I was having this conversation at another event recently where an external speaker was called in to talk about AI and the markets.
Right.
And he was of the firm opinion that it's all going to blow up in a spectacular fashion.
Blow up meaning it's
as in it's overhyped, overinvested, overinflated. That was his view.
Right.
And we ended up having an interesting sidebar conversation. I was telling him, I'm not so sure, because if you think about, of course, it's on the one hand easy to think that because we have companies that are valued in the private markets at a level that has never been seen before. Money is raising capital, seed rounds at a level that has been never seen before, raising amounts of capital and having access to capital never seen before. So it is perhaps easy to believe that. But on the other hand, I think about what I was saying earlier, which is this is going to so fundamentally change how we live, how we work, how we interact with family, friends around the world, every single thing pretty much over the long term. So who's to say whether it's overhyped or not? Who's to say the ones who are actually putting in money as investors, to your question, aren't the smartest people on the planet? So I don't know, to be honest, is my honest answer. But it's certainly super interesting times, and I just sort of very privileged to be sort of witnessing it live as it plays out.
You're very humble in the way you presented yourself. So I actually want to give you a chance to introduce yourself and your firm properly, because contrary to what you've said so far, I know you've had a very illustrious career. You've done a lot of great things. So who are you and what do you do?
Oh, wow. Thank you for saying that. My name is Rajiv Menon. I'm an MD with Cisco's M&A and Investments Group. I live here in Singapore, as you know, Murli, with my family. I'm in a global role, so maybe let me take a half step back to just talk about our team. So we're a team of about 40 folks around the world. About 3/4 of us are on the deal side at various levels, and the other 25% of the team are our awesome portfolio development team, which I would love to talk about perhaps later, as well as folks like Danny that you've come to know, our awesome comms colleague, our events and marketing folks, etc. So that's 40 of us. On the deal side, we are organized as covering regions, so Israel, Asia Pac, Europe, etc., and Cisco domains, so security and observability, collaboration, networking, IoT. So I lead several of these domains for the company from an M&A and investment standpoint globally. Very privileged to be doing it. The areas that I cover include enterprise networking portfolio. On the campus and branch side, that includes our wireless Wi-Fi portfolio, the Meraki portfolio, as well as our industrial IoT business. And then what we call the mobility business that includes use cases and areas like connected cars, telematics, and then extends into the telco side on 5G and even RAN, the radio access network. So that's what I cover globally. And then living here in the region, I also directly oversee our Asia Pac and Japan coverage, extends into Australia, India, etc. So a fun job, feel extremely privileged to be doing so. And I'll happily date myself here. You wanted to know who I am, and I'll talk about professionally. So I joined Cisco a little over 20 years ago. And before I joined Cisco, I was a co-founder of a company, lived the whole journey of, bootstrapping, first employee hire, first customer contract, all of that type of stuff, and then raising institutional capital over a couple of different rounds. So
Where was that company based?
I used to live in Hong Kong at the time. It was headquartered out of Hong Kong.
Yep.
So I've had the unbelievable privilege of having seen it from that side and lived that. And in the last 9.5 years, I'm in my 10th year in this team, seeing it from this side and working with founders. I was recruited into Cisco. I was giving myself maybe a year or two at most to last here, only because I was coming into this big company from a startup.
Yep.
But man, did I luck out. I mean, it's an amazing company to work for. And honestly, if this sounds like a plug or that I'm a fanboy, I still am. It's like one of those things where you're deeply in love 20 years after your first date. But also specifically the position I ended up in, I was recruited to help build out a business. It was kind of like being back inside a startup, but I didn't have to worry about fundraising, employee paychecks and things like that. So I was still doing the hard stuff, but the funner stuff. And before I knew it, a decade plus had passed. The business had grown significantly. I grew and I was ready for something different. And then I was lucky enough to be recruited into this unbelievably amazing team, world-class team. And I'm not complimenting myself when I say that, by the way. I'm a beneficiary of this amazing franchise Cisco has developed over time. So that's me. Hopefully that's a useful intro.
Yeah, it's very helpful. And I'm also told that Cisco has just got this $1 billion global AI fund announced, I think, last year.
Yeah.
Tell us more about that.
We announced our $1 billion AI fund back in June 24. And maybe before I talk about that, I'll talk about Cisco as well from an AI perspective. So I would say Cisco is approaching AI with maybe 5 pillars, if I can call them that. First is infrastructure for AI to power AI forward. And actually in the fiscal year just completed, our CEO announced this, our CFO announced this, publicly. We clocked north of $2 billion of AI infrastructure revenue. So that includes our custom silicon. You were talking about the different areas in AI. It includes our AI pods, our unified computing system. So infrastructure for AI. The second pillar is, security for AI and AI for security. And what I mean by that is if you think of the enterprise of tomorrow, actually, I would say maybe soon to be the enterprise of today.
Yep.
Agentic workflows, AI is going to be pervasive right through the enterprise. Yep. And you want to be able to, operate with peace of mind, knowing that it's secure, knowing that querying an agent to do something, the agent doesn't end up pulling out data that's confidential, passing it to the wrong persona and things like that. And similarly, you want security products and offerings to be built with AI embedded natively inside them. So we have offerings like Hypershield, AI Defense to help with all of that, model security and security in production workflows. The third thing I would say is data. You want to be able to get reliable, extensive, intensive data to make informed and better decisions. And then the fourth and the fifth thing I'd say is, software for productivity and services to accelerate the value from AI. So that's at a Cisco level, these 5 pillars we talk about. Then coming to the funds, Cisco is, of course, building technology that is essential for AI, but it also wants to invest more broadly in the ecosystem to really accelerate the industry forward.
Okay.
And so if your audience looks at our Cisco Investments website, you will find that we are invested really pretty much right across the stack. They'll find very easily recognizable, well-known names on the LLM side, on the AI infrastructure side, companies like Grok, or the GPU cloud side, or at the silicon level, or deep fake detection side, all of that. So we're really investing right across the stack because we want to move the industry forward to give customers more effective choices, better choices in a very, very fast evolving world, as you know. So Cisco wants to be agnostic player. That's why we want to provide all of these things. So, enterprises can operate with trust, with confidence, feeling secure. Hopefully that makes sense.
Yeah, it does. Thank you. That's an extensive intro. Moving to IoT, which you mentioned briefly in your personal intro. Now, it's an old word, but it's one we're both interested in, right? So Tinman invests in enterprise software companies, some of whom sit on top of sensors. They usually don't make the sensors themselves, they use off the shelf. And of course, you have global responsibility for IoT. And as I said, it's an old word. What's new in IoT?
I have been around IoT for a very long time, even before I actually came into this team. Don't ask me why, but I have. That was, of course, from a non-investment M&A standpoint. And maybe I'll say a couple of things, and my answer on what's new might surprise you. I'm not sure.
Okay.
I think IoT was at its peak hype cycle, let's call it 20 years ago, 20 plus years ago, right? And I will say that for the following 10-ish years, give or take, it was very difficult to find highly scaled IoT companies. And in my personal opinion, that's not because the companies weren't building great technology. It was because the world at large was not ready to consume IoT technology at scale. We can unpack that a lot more if you like, but that's the summary of it. That has changed a lot in the last 7, 8, 9 years. It is not difficult to find very scaled IoT companies. In fact, some of the most valued, highly valued companies in public markets are in fact also IoT companies. So it's not difficult to find. We have some in our portfolio. We're lucky to be investors in some amazing companies. And I have, of course, met many that are at big scale. So I would say what has changed, it's an old world, but what has changed is IoT is no longer associated with, this sort of this space where companies talk a lot about that, but you're not able to find companies doing meaningful business.
Right.
That's changed a lot. There's a lot of them at big scale and making money.
And going forward, what are the applications that you think where IoT is going to increasingly become sort of pervasive?
I would tell you that, there's a lot. So I can talk about it from a few different angles, but for example, in our mobility business is what we call our connectivity management platform. So someone like you will appreciate this very much. When you think of IoT, there is the device, there is the network on which it rides. So it could be 5G, it could be Wi-Fi. There is the application that you asked about that drives the use case. But then you need a connectivity management platform that pulls all of these together.
Sort of like an orchestration platform.
Orchestration, you onboard or offboard devices for an enterprise as an example. You can switch data plans, like all kinds of things. So yes, that platform. And that pulls all of these things together. And so we are the largest platform on the planet. We have north of publicly stated 270 million devices on our platform. And that gives us lots of insights to your question as well. So we have 40% of them are about connected cars. Then we've got water meters, gas meters, and things like that as well on that. So it's going to be right across. It's going to be pervasive. We talked about AI. AI is moving at a very different pace. But IoT is going to be pervasive. I mean, things like that were talked about 20 years ago, where you can issue an instruction to your fridge and ask it to do certain things. And, there are within These, I can talk about some that are, super exciting, like connected cars, if you think about it. We're going to have so many connected cars are in sort of the iPhone moment, I feel, right? Like when iPhone was introduced a few years after that, it was, if you ask somebody if they had a phone, you assumed they had a smartphone, not a feature phone. And so is going to be the case with cars. It's happening right in front of us. Like cars that are rolling off any production line now are inherently connected cars. I'm not talking about cars that get connected via your phone, that are inherently have an embedded SIM in them. And that's going to enable so many use cases.
You've lived here for some years now, right? When it comes to your venture and M&A job, why Southeast Asia? Why are you here?
Why we are here? Because Singapore is a great place to live, as you will, I think, appreciate. I mean, I originally moved here for my Cisco job. So, when I was a startup founder, got recruited into Cisco, I was asked to move to Singapore. It's the Asia Pac headquarters. Obviously, my family and I really love the place. But more broadly speaking, I would say that, Southeast Asia, I've actually famously said this many years ago publicly, is, and will remain one of the most dynamic economic blocks in the world for a lot of good reasons that have been around, have existed and will remain. Unbelievable demographics, economies generally in great financial shape. So after the late 90s, currency triggered issues, pretty much every country around the region really fixed its house and have been in very, very good shape. And of course, GDP growth has been great over the last few years. And I think that'll remain the case for many, many decades to come, I think. So it's a very significant region. Singapore, in particular, in the startup investing world, punches way above its weight. You can say what you want in comparison to markets like whatever, India or other places. But the reality is it punches way above its weight. And each of these markets offers its own distinct sort of interesting learnings and has strengths. And maybe we can talk about that if you're interested, like Australia, India, Japan, Southeast Asia. But to answer your question on Southeast Asia, it's an incredibly dynamic region. I feel like it's sort of almost a perfect place here, particularly in Singapore, to be kind of covering the region, which is part of my job. And Singapore, and in particular, as it comes to enterprise tech, which is also what you focus on, within Southeast Asia, 90% of the action is right here in Singapore. So it's a very efficient place to cover the Southeast Asia enterprise tech innovation out of.
Thank you for making the case for Tinman. If you're an LP watching this, while you're listening to this, you should invest in our fund because this is what we do. Well, jokes aside, actually, you said three things which actually are covered I did a keynote last week at our annual event, Tinman Exchange. Three of the things you said there, I actually said last week as well.
Okay.
Right? So
all right, there you go.
We are in simpatico, as they say. More on Southeast Asia. So when I first started in venture, so I started in 2008. So that's now, 17 years ago. I can't believe it. I used to semi-joke, and it's a joke, but some truth, that China was 5 years ahead of India, and India was five years ahead of Southeast Asia. So you don't have just one, but two crystal balls for what's going to come in Southeast Asia. It's quote-unquote easy, right? What do you think?
So you said China ahead of India and India ahead of Southeast Asia. Wow, I have not ever thought like that. What I think of is the following.
So by the way, when I said that, what I meant is in terms of startup activity in particular, right? I don't mean economic development.
Okay.
Yeah.
Yeah. I mean, in terms of scale, China has, I think for a long time, I haven't checked the latest stats, was the second largest venture dollars going into any country, right? After the US. So huge market. Once I had looked at the, Asia Pac stats, and I think China was at about 45 billion by itself. Mm-hmm. And then the rest of Asia Pac, Japan, India, Australia was at about 45 billion. So a huge market, of course. Mm-hmm. India within that, to your point, last I checked is at about $20 billion annual venture dollars. So huge market and growing. And in fact, the best performing market globally over the last year, right? Like Japan and India both, but India in particular, the best performing market. Southeast Asia, I think at its peak was about 15, 17 billion. The thing I think about a lot is, sort of the texture and the flavor of the markets between enterprise tech and consumer tech, right? So because we are enterprise tech investors, we tend to, do double click on that. As an example, I'll draw these contrasts for you. India and Southeast Asia are very similar in the total percentage of dollars that go to consumer tech and enterprise tech. So call it 80% goes to consumer tech, 20% or maybe even 15% goes to enterprise tech, which is our interest area. But that 15 or 20% is a lot of dollars. So you take 15, 20% of, 15, 20 billion, you're talking, very, very significant sum like, $4-5 billion. On the other hand, and in contrast is Australia and New Zealand, where the total dollars are meaningfully smaller, call it about 3 billion a year going into the total ecosystem, but about 70% is enterprise tech. So it's the reverse ratio. So what you often find in those markets are very enterprise savvy entrepreneurs, rich ecosystem investors, many investors who are very enterprise tech focused and savvy. So it's those types of things that I have always looked for that are interesting to us, because you can have a huge market, but most of it may not be relevant. I mean, that isn't the case, but that could be the case. You can have a smaller market, which on the other hand might seem like, who wants to bother? But it may actually be a really rich ecosystem. And as an example, Australia has many examples of companies that have proven themselves on the global stage in the enterprise tech space. I mean, they invented Wi-Fi, for example. Not many people know that. And similarly, India, which is a very large consumer market, has, of course, produced so many global winners in the enterprise tech space. So it's those types of things that we look for always.
When I made that comparison, the 5 years China, then India, then Southeast Asia, I was talking about venture dollars and startups being formed and people aspiring to become entrepreneurs, stuff like this. And it was certainly, I think, true-ish back then. And this was a time when India had maybe 2 or 3 billion in venture investment per year, not 20, right? So much, much earlier. That's why I said then versus now. And you've given a great overview. Obviously, Singapore is a big part, and we agree with that. Outside of Singapore, let's leave that aside for a second. What markets do you think attract more interest for enterprise investing, startups actually going in there, and so on? Are there any, or would you say there's a few shining stars? Is it generally equally spread across Southeast Asia?
From an enterprise tech perspective, Singapore stands out significantly. But outside of Singapore, I would say Vietnam, whether it's fintech, maybe ed tech, but ed tech also you can have a lot of consumer focused plays, or you can have enterprise focused plays. So things like that. So Vietnam, I would say a little bit of stuff sprinkled across the rest of ASEAN, but I don't see a lot. Like there are companies, of course, but if I think of 100 companies we meet in any given time period out of Southeast Asia, I would say, maybe 80 are based right out of here. Maybe 7 or 8 might be Vietnam, and then the other 13 are spread right across, like some rough numbers.
And why do you think the other countries haven't sort of stepped up on that, right? So especially let's look at somewhat higher income countries, Thailand and Malaysia. They've got largish economies. Thailand certainly does. I don't think it's lack of talent necessarily.
Not at all.
So what's the issue?
Follow the money. If you've got a large population, where is the largest opportunity? It is in consumer tech.
Malaysia is not a large population. It's 35 million people.
Well, and Malaysia has some enterprise tech. Maybe Malaysia will be, out of those 13 that I was talking about, maybe 5 will be Malaysia, 6 will be Malaysia. So it's got its fair share within the 20%.
Right.
I mean, it's not 5 million. Sure, 35 is not 100 million. But, it's still a reasonable sized economy where you can make a decent sized consumer business if you want. Now, it's different for with 1 billion people.
Right.
But yeah, I would say it's not lack of talent at all. It's just opportunity.
Right. So then a place like Indonesia, given that it's now one order of magnitude beyond that, right? Not 35, but 300.
200, yeah.
200. Of course, a lot of the money would go and a lot of the interest from entrepreneurs will go towards consumer. But if you say 20%, I think there aren't that many enterprise tech-focused companies out of Indonesia. First of all, do you agree? And if you agree, then you want to speculate as to why?
I would say similar reason, right? Like the consumer opportunity is so large, in fact, that, that's how naturally the the founders, the ecosystem, the investors have flown, and
Yeah.
that's the reason, I would say. And on the other hand, of course, you always have, call it international players offering these enterprise tech solutions. So
Yeah.
ASEAN is an economic bloc. It's not the same country, of course, right? Each
Yeah.
country is very distinct. But, it's easy to go to Indonesia or Malaysia and sell some of these things. So, it's, again, follow the money. If you've got a large local market where you think you have a competitive advantage to build a big business, then that's where you're going to go. That's what the investors are going to back.
Yeah. I was asking also because you mentioned Vietnam, which I agree with you 100%. Vietnam is a smaller population, but still very sizable. But they do have, as you said, enterprise-focused companies there. I'm just wondering why it didn't translate to, why aren't there double the number of enterprise-focused companies in Indonesia versus Vietnam?
I mean, this is a complex set of reasons that ultimately influences this, right? I'm talking about maybe the one of the easiest one to pick, which is sort of follow the money, where is the opportunity? But there are other things. So for example, Vietnam historically has a lot of strong connection with the US, right? And that influence, like I personally know of some Vietnamese founders that basically live between the Bay Area and Vietnam and have tech teams in Vietnam building a business in the US or some combination like that.
So sort of like India.
Yeah. Smaller version, exactly that, right?
Yeah.
So large percentage of Valley founders are of Indian origin, as you know.
Yeah.
Then India started with its tech services businesses back in the early 90s. And all of that has just created this very strong connection and corridor. So you can say exactly that a version of that exists in Vietnam. And which is the largest enterprise tech market in the world? It's the US.
Yeah.
And if you have that connection, perhaps that influences, where a lot of your founders end up going. So it can be those types of factors too that ultimately influence this.
Got it. Switching gears, as a former founder, but also someone who's backed and worked with many startups, what is one thing you believe about company building that most others would disagree with?
I don't know, Murli, if this is something most would disagree with, but it is something I very strongly believe. And I haven't heard many people talk about it proactively. Or in fact, I will say anyone talk about it proactively. But again, I don't know if people would disagree, which is that I think building companies and a founder's job is absolutely the hardest business job out there.
Okay.
Many people do difficult, challenging jobs. I think my job has a lot of challenges, positive challenges in it, but it pales in comparison to a founder's job. And I'm saying business job because I'm excluding our firefighters, police folks. Because I say that for many reasons, but a founder or a company builder, ultimately being the top woman or man, will have, particularly at a scaled company, will have, your chief strategy officer, your CHRO, your product officer, etc. But you have to be part CFO, part CHRO, part CSO, part, engineering lead. And you're making those calls because the buck stops at you. And you're betting ultimately the future. Again, you're relying on folks who are experts, deep experts in this field, but the buck stops with you. And you are directing the ship. And it's the toughest job. And I say that both with appreciation as an investor for founders that I know, that I invest in, but also having been in those shoes for a little while. It's gut-wrenching, it's rewarding all at the same time, but it's a really, really, really tough job. The toughest job in my view.
And you alluded to some things which actually anticipated my next question, which is great. What changes have you seen in startups as they grow from like a small team, let's say sub 20 people, through to hundreds perhaps, right? And what stumbling blocks should founders and their teams and less experienced investors, watch out for as that transition happens?
Yeah, Murli, I will say I've been certainly very privileged to have companies in our portfolio across the spectrum. So handful of employees to hundreds of employees to even in thousands. I've sat on the boards of companies that ultimately became PE owned. When we invested, they were younger companies, and I served on those boards for a long time. So I have certainly seen the spectrum. The one thing I will highlight as the greatest challenge is a word that is very commonly used in our industry, But I don't think founders and companies and early investors get enough help around this, at least not proactively, which is scale or scaling. It's an easy enough word to say. And as I said, it is used very often. But let me unpack that for you a little bit. So when you are a founder of call it handful with a handful of employees, right? Or a group of founders with, 20, 30 employees, you will know every one of those employees personally. You will very likely have hired every one of those employees personally. You will perhaps even know their families really well. So it's truly a very personal relationship. It begins to become tricky to do when you get to about 100 employees. And it's damn near impossible to do when you're 500 employees. And if you're still attempting to do that, you will do that at a very significant cost of a lot of other things you still need to do to build a successful company. That just can play out in so many ways. So think about you turning from a manager of people in that small handful group to being the manager of managers, having 4 or 5 layers underneath you, getting to a point where by head count, you don't even necessarily know the names of most employees in your company. Think about how you learn to delegate decisions, the types of leaders you then decide to hire, and what autonomy you give them, so on and so forth. Because if you're still trying to have every key decision being made come through you, you will definitely become a choke point. You will create stress right across the system, including for yourself. And that is not an easy transition to make. And I find that somehow founders are expected to just work through it, grow into it. And there might even be some hesitance on the part of founders to ask for help. Maybe there is stigma, I don't know, or maybe I really want, I don't know what your audience size is, but I really hope, to the extent there are founders in the audience, what they will take away, if nothing else from today's conversation, is that there is no shame in asking. Please know that every experienced large enterprise leader you might know of got there because they got coached.
Yep.
Coached by their manager, coached by a formal trainer, coached by an executive coach.
Yep.
And they learned to manage large businesses. And so nobody's expected to just know it right off the bat. And I think this is a very underserved aspect and space. Again, scale and scaling is used a lot, but not enough help is around founders. They don't also ask for enough help, and they should. I would highlight that. And I'm not even talking about the other scaling issues like operational scaling, which is very significant.
Right.
Supply chain changes, software supply chain, hardware supply chain, or all the other types of aspects. So that's my answer, Murli, that I think that's the thing that I hope we all collectively focus on a lot more.
And the point you made about founders getting trained by their coaches, and they might go to exec school, they might all these other things, right? We have one other element in our own sort of, let's call it content portfolio. We have this flagship event that we do called Founders and Founders, where it is a relatively small group of people. I or my co-founder, we're a moderator of the group, and it's a roundtable where there's no one speaking sort of at them or to them. It's founders talking to each other. Now, you said stigma. I'm not sure stigma is the word I would use. I've not noticed people, put it that way. Rather, they've said they felt shy. Like, am I allowed to talk about this stuff to somebody else? Who can I talk to? I can't talk to my spouse or my parents because they don't know my business. I can't talk to my staff because they expect me to sort of be leading and potentially be in the role of saying, look, here's what I know. You can express vulnerability, but you can't necessarily say, look, teach me how to do this better. So who else do you talk to? You talk to other founders who are basically in the same position as you. So we try to do this curated form of roundtable discussion where, so let's say, founder X, let's say you're one of the founders, and I know you're the expert at, you talked about scaling supply chain, for example. Somebody else is the expert at, hiring at scale. Somebody else is expert at, fundraising or whatever, right? Fundraising not at the angel or the Series A level, but fundraising at the 30, 50, $100 million level, right? And I personally, when I'm in the room as the moderator, I know those facts about them. They don't know each other's facts. So I'll say, look, Rajiv, you have a question that I think you've written down before the session started. Why don't you, tell us what your question is? Then I'll say, this gentleman here or this lady here, she has the answer for you. So that does two things, right? One, it allows people to say like, oh, actually, I don't need to have all the answers. People can ask questions. Second, it elevates a person who actually knows the answer. So we try to do that in a manner that is, founders just love it. It's always oversubscribed. We have to unfortunately turn people away because if it gets beyond, again, the scaling problem, if it gets beyond 30 people in a room, it's very hard to do. Sometimes we even bring it down to 20. We essentially run two things in two roundtables in parallel, with me in one room and Jeremy in another room. So we can manage, anywhere from 50 to 60 people, and that's it. Desire for people to attend is much, much larger, right? Occasionally, we'll focus the session on a very specific aspect. Like we did one a couple of months ago on founding while having a family, right? And originally, the way we'd thought of the idea was founding with young children. But then I said, no, family means more than young children. It means someone who is going through a divorce, someone who has an aging parent, someone who had a death in the family, someone whose child is going to university soon, right? These are all hard. It's not just when you have a young child that it's hard, right? And that was I was a little bit nervous that people wouldn't want to even engage. And they're like, no, this is sort of mushy, softy. Am I supposed to talk about this stuff in a work context kind of thing? But it turned out that people loved it. Everyone who came engaged. Every single person talked about some challenge that they were facing. Sometimes there were founders who were married to each other and they were in the same room together, right? And they are sharing things like bearing their soul almost. And anyway, I've gotten a bit off topic, but it really was that founders can also seek help from other founders beyond just, asking for quote unquote the professionals to help.
Yeah, and my main point, Murli, is I wish we do more of that, a lot more of that as an industry. To your original question around what is the one most significant thing I would highlight, I would say we would do. And whatever it may be, I don't know if it's reluctance or some friction, but I just hope a lot more of that happens.
Another topic which is a sort of a close to my heart is I often say that I love Charlie Munger's, philosophy of inversion. And when he says inversion, what he means is if you want to succeed, think about what you want to avoid, not think about your desired outcome. Okay? It really sounds strange, but it works. So avoiding failure leads you to success. It sounds super weird, but it actually works. Unfortunately, it's easier said than done. It's easy to do in hindsight because we're not all Charlie Munger. And honestly, most founders are optimists, right? You're not going to think about what's going to, what obstacles you have ahead or what modes of failure you might have, etc. You're going to think about, look, all this great stuff is going to happen. I'm just going to drive towards it, right? But let's take Charlie Munger seriously. Can you picture a startup or maybe more than one startup that you know personally, okay, which is heading towards failure? You don't have to tell me their name. Maybe you invested in them. Maybe you haven't invested in them. Doesn't matter. As long as you know them and they're heading towards failure. I'd like to offer you the opportunity of advising them or asking some hard questions. And obviously, because you haven't named them, they won't feel like they're being attacked, right? But it'll still potentially be useful if they're listening to this. What would you say to them?
The reasons of failure or potential failure could be many.
Yes.
Right? Of course, we don't have the time to talk about all different types of scenarios. But the one that I would...
So let's talk about a specific example or more than one example.
Yeah. So the thing I would just simply highlight is that I think the time that founders give themselves to raise a fresh round of capital, right, assuming they're still on that growth journey and they need to continue to raise, is sometimes not enough. And it's a reality. It may be something that founders don't necessarily enjoy, having to raise capital, but it's necessary, obviously. That investment of time needs to be on an ongoing basis. You may not be raising capital actively, but you need to be thinking about actively all the time. It's back to my point about, I think a founder's job or a company builder's job is absolutely the toughest job on the planet, bar none. And what you want to be doing as a founder is, of course, building this exciting, great product, meeting customers, building teams, changing the world. And this can feel like a distraction, an unnecessary thing. So my general advice, even if I think of a specific company or I talk in general, it's think about allocating a percentage of your time. It's sort of like, I don't know if it's a good analogy or a bad analogy, but exercise. If you want to get good exercise, health experts will tell you get a certain amount of time every day. So allocate time to this every day, whether it's meeting investors, right? Telling them your story, creating a network. such that when you're ready to raise, you are doing it being more ready than sort of a standing start. Oh, oops, we've got 6 months of runway. This is something that's absolutely critical. I mean, it's like one of those things that you don't never ever exercise. The likelihood that you'll have an unhealthier version of yourself is 100% versus what could have been. You don't have to compare yourself to other founders or other people who are more healthy or less healthy, but you can be sure you are unhealthier than you could have been if you were exercising. So you'll be in a better spot if you are always thinking about something like this. You'll always, be in better position. It doesn't guarantee success, of course, but it minimizes the risk of failure to your point about Charlie Munger's philosophy.
Yeah, and I generally agree with that. Essentially, I think the point you're making is twofold. One is consistency, and number two is, I think, the probability of failure, if you keep reducing it across multiple dimensions, the likelihood that any one of them can kill you goes down.
Yep, absolutely.
So you sort of, as a mathematician, you say 1 minus equals, right? So you're minusing the probability of failure. Therefore, the probability of success goes up from 30 to 40 to 50 to whatever percentage, right?
That's right.
We often receive listener questions from our guests. So here's one from James Harris, who's an emerging VC, very focused on supply chain in particular. He asks, what opportunities do you see for VCs and startups in this region to collaborate with peers in Europe and North America?
Fairly broad question, but I would say the opportunities exist, of course. There can be multiple ways. There can be multiple sort of mutually beneficial aspects. So one I would say, for example, is, I don't know if this is Asia Pac or a Southeast Asia focused question.
Southeast Asia.
Southeast Asia. Look, as I was saying earlier, Southeast Asia is not a country.
Yes.
It is an economic bloc of very distinct countries, particularly for those of us who live in the region, appreciate that. Thailand is not Malaysia, is not Philippines, is not Indonesia, so on and so forth. Different languages, business cultures, regulations even, etc. So someone who's not from here, a European company or an American company looking to set up shop here, could actually use a lot of help and guidance in expanding in the region from someone who knows the region well. So that's one example. So that's my quick take on opportunities existing and where they could play out.
Makes sense. And to our listeners, remember that you too can send in questions for our guests, and the details are in the description. So we're coming to close to the end of the episode, and I'm sure our audience would love to get to know a bit more personal side of you, right? Can you tell us one interesting fact or story about yourself that maybe even your colleagues don't know?
If it's something that even none of my colleagues know, I don't know if I want to mention it on the podcast. But I can share something that most people don't know professionally.
Right.
And most of my colleagues, being broadly the Cisco colleagues, not just the corp dev and investments team, don't know. I'm a competitive polo player. So,
okay.
Yeah, that's one fact for you. By the way, I have a request. I don't know how much time we have, but before we wrap up, I'd love to talk a little bit more about our team and maybe consider that a plug for our team, but I truly want to highlight, and I think it'll be useful, at least for your founder listeners, if not others.
No, please do. In fact, I was going to ask you next, what's the best way for folks to contact you and more broadly your team? So this is a good opportunity.
Oh, okay, cool. Great. So let me start with the team and then I'll talk about the best way to contact me. So let's see, I talked about us being a group of about 40 around the world. What I did not highlight is that, or at least I don't think I highlighted, is that we are a team that does both M&A and venture investing out of the same team. I don't know that I can say that about any peer, big or small. And what makes that even more special is that we are active at both ends of the spectrum. The first acquisition we made was a little over 30 years ago. We've been consistent acquirers, and we've done more than 200 acquisitions. We've been investing all along in hundreds and hundreds of companies. Today, our active portfolio is well over 100. So we do both activities in the same team. They are distinct motions, but done by the same team, by myself and by my colleagues. And think about that for a second. So that amount of deal activity done out of the same team over that long a period of time, and think about the institutional knowledge that is built up at Cisco. We have not only folks in corp dev and the Cisco Investments team that can guide these founders on company building and what it takes, having seen it from all of these angles. We have senior leaders inside Cisco. Because this is so much a part of the DNA of the company, senior engineering leaders who can give you feedback on your technology and product market fit, senior sales leaders, access to Cisco's sales team globally, tens of thousands of folks, access to Cisco's customers in nearly 200 countries, access to Cisco's channel partner network. And I referenced briefly our portfolio development team, some of my colleagues, absolute world-class team that actually brings all of this to bear for founders and startups. They become the champions along with the investor in the company to access all of these channels, whether it's leaders, our customers, our channel partners, technology showcases, and things like that. So I think that truly differentiates us when you think of all of that combined in one place, truly differentiates us as a CVC, as an investor, as a company. So thank you for the opportunity for me to highlight that.
Yeah, very much. And I think that's a big strength of the organization. How do you guys think about signaling risk, or is there even perception of signaling risk? And by that, what I mean, to be very clear, when an entrepreneur comes and raises money from your team, and they also know that the same team does M&A, let's say 4, 5, 6 years go by, and the company's up for sale, Cisco says no, right? That's a signal risk potentially to other acquirers or even to their own staff, saying, look, they invested when we were so small, and now we're ready to, we've achieved all this great stuff and we want to sell, and Cisco is staying out of the system. How do you navigate that? How do you actually convince entrepreneurs that they should take your money despite this being a possibility?
Yeah. So I'm glad you asked that question, Murli. So first of all, I want to clarify that, and I'm not saying you're saying anything otherwise, but I want to be sure that the audience understands. While we do both activities in the same team, they are distinct activities, right? So we don't call it some secret terms in the venture rounds. These are market term investments, and we are co-investors right across the board with the world's best venture investors, right? So we do market terms. These are arm's length in that sense. And we invest, and we obviously communicate intensively and extensively with the company. So maybe I'll also take the opportunity to highlight what we look for when we invest in the company. That'll tie into the question you're asking. So first of all, we look for whether it's a real problem that customers want solved. Mm-hmm. I described earlier, I think I referenced Cisco is 55, 60 billion in revenue across 100 plus countries, various product segments. So we get a lot of real-time signals on a minute-to-minute basis on what customers are looking for, what innovation they're looking for. So the first question we want to answer is that a problem customers want solved? The second thing we look for related to that is the technical depth of the solution being proposed. How innovative is it? The third that ties directly to that is how exceptional the founding team is, not just technically, but from an overall business building standpoint to some of our earlier conversation. Then very importantly, tying a little bit to your question is, what are the possibilities and prospects of a real symbiotic long-term partnership between Cisco and the company?
Yep.
We are happily and proudly strategic investors, which means that while financial returns, of course, matter, our greater objective, our primary objective is that strategic alignment between the company and Cisco, right? That's what we want to bring together. In my 9.5 years in the job, I have never met a founder or a company who was interested to take our money that didn't want to partner with Cisco. And so is the same for Cisco. Anytime we invest, we want to try and partner with a company. May not happen in 100% of the cases, but happens in a big chunk of the cases, and we want that. Finally, culture fit, Murli. So you might say, well, culture fit makes more sense when you're acquiring a company because that's part of your organization. And of course, that would be true. But actually, it matters with partnership investment too, because in any partnership, even if we are just one name on the cap table, in a true partnership, not to get too cheesy, but in life or at work, you want alignment of thought process, your ways of doing things, your values and things like that. So all of that is what we look for when we invest. And to come to your question additionally, look, we have these very specific conversations with companies when we invest. When we are investing in the company to learn about the next gen markets that are being created. to learn about key market transitions that are taking place, right? And all regional innovation as well. We want to be tracking innovation in Australia and India as much as anywhere else. And so we have these very clear expectations and conversations that we're not acquiring you to, signing terms that we are, guaranteed to acquire you or something like that. And that depends on a variety of factors as these things play out, as someone like you would appreciate. So like a lot can change. The company may choose to not be acquired by anybody and go to IPO, and their path might be different from what, how Cisco sees the vision. And these things evolve very quickly, right? That's one of the interesting things in the technology world, that things evolve so quickly in the marketplace. So not because the company or Cisco wanted one thing or the other, that things have evolved in the marketplace. So those things happen. So there is a percentage of companies we end up acquiring arm's length out of our portfolio, but the investments we set expectations very clearly. That's very important to us.
Yeah. And the point about culture fit, I mean, you said it's cheesy. I don't think so. We are the same. In my investment memo, we have a section that specifically says fit with Tin Men, right? What sort of fit does this company have and the founders have with us, and vice versa? What fit do we have with them? We've sometimes said no to companies where all of the first four factors that you said worked out. Great founders, strong market, there's clear pull for the product, all the rest of it, right? Valuation was fine, everything was fine. But the founder very clearly said to us, look, this is all great. You guys have done a great job. Once you give me the money, I'll give you updates, same schedule that I give to any of my other investors, but you need to be sort of silent and, speak when you're spoken to, right? He didn't say it so sort of rudely, but essentially that was a sense. And we said, no, I'm not sure that would work for us. And we walked away, right? Because again, it's a semi-joke. It's easier to get divorced than to sort of split investor and company sometimes, right? So it's a very long journey. And if at the very start you're saying, look, stay away, it doesn't work for us.
Yep.
It works for some folks who have 30, 40, 50, 100 companies in their portfolio, and each of them is like 1% of their AUM. It doesn't really matter, right? There's an index sort of approach almost. So there, you don't need to be sort of talking to the founder every 4 days like we do, right? Somebody in our company speaks to every person in our portfolio roughly once every 4 or 5 days. So it's that often. And if they're not up for that, then no problem. That's the way you operate. It's just not right for us.
Right.
So the folks who fit those criteria that you laid out, the 4 or 5 criteria, how should they contact you or your team?
Yeah, I was going to get to that. So I'm happy to give you my email. You can post it in the link if you like. It's easy to remember. It's ramenon@cisco.com. So Ramen and then on. You can also ping my administrative partner, Shireen. Her email is hkey@cisco.com. Or, of course, I know they can contact you and you know how to get in touch with me.
Yeah. Thank you very much for being so generous with your time and your insights, Rajiv.
Really thanks, Murli. Thanks for having me here. Appreciate it.
Thank you. And tune in again for the next episode of Unfair Advantage from Tin Men Capital. Thanks for listening. Tin Men Capital also organizes events and shares other resources for founders and investors and everyone else in the community. To stay in the loop, follow our company LinkedIn page or go to www.tinmen.asia for more information. And remember, if you like this episode, tell your friends. If you didn't like it, tell your enemies.